The Real Estate Select Sector SPDR ETF is a popular REIT ETF that has provided diversified exposure to United States Equity REITs for over a decade. Today's investment environment is difficult for income investors. Inflation is sticking around and is headed towards an uncharacteristically strong year. In fact, current rates of inflation are the highest in over 2 decades, resulting largely from monetary policy and supply chain waves from the pandemic. Inflation has remained above 6% for several months and is on pace to clock its first year above 6% in some of our lifetimes. Inflation highlights the need to keep capital productive, working hard while we sleep. As inflation reduces our purchasing power, yield and growth have become a priority for investors of all shapes and sizes. Investors have limited options to generate a beneficial combination of income and growth. Treasury yields have increased since the height of the pandemic, but the 10-year still remains below 1.5%. Fixed income yields have remained near historic lows, and even the S&P 500 has lost its flavor, as its dividend remains around 1.25%. For reference, between 1960 and 1990, the dividend yield of the S&P 500 rarely dropped below 3%. The reduced income from traditional asset classes such as stocks and bonds leave investors looking for alternatives that can pay the bills. Furthermore, the lack of growth available from fixed income creates a dangerous scenario during a long-term inflationary period. Of the offerings presented below, only high-yield fixed income offers a more attractive current yield. Fortunately, real estate can alleviate these pressures. Historically, real estate has presented investors with an opportunity to provide current income in the form of rent collection, paired with long-term capital growth from rising asset prices. Generally, high-quality real estate has been difficult for individual investors outside of the ultra-high net worth category. Price tags and a competitive ecosystem often leaves mom-and-pop investors in the dust. Public REITs provide access to the highest quality of real assets in a scalable, efficient package. So, how have REITs stacked up recently as inflation takes hold? As it turns out, quite well. XLRE has outperformed the S&P 500 and traditional fixed income classes over the past 12 months. As inflation accelerates, so does performance from REITs. Additionally, investors who are willing to refer to prior periods of history will find that REITs consistently outperform during inflationary periods. While REITs have traditionally underperformed the S&P 500 during periods of low inflation, increases in CPI generally boost REIT performance. REITs best benefit from periods where inflation remains between 2.5 and 6.9%. Let's see why XLRE is a strong pick for broad US REIT exposure. Core real estate exposure. As we mentioned, XLRE seeks to track the Real Estate Select Sector Index. The ETF is part of State Street Group's Sector SPDR ETF lineup, which offers 11 funds focusing on different S&P 500 sectors. The fund is large, managing over $5.4 billion in total assets. The fund casts a wide net, providing exposure to all equity REITs in the S&P 500, weighting more heavily towards the largest capitalization companies. The fund does not invest in mortgage REITs. The fund's market cap weighting means larger, established firms receive the largest allocations. As it stands today, the largest position in the fund is American Tower at 12.8%. AMT is the world's largest tower REIT, owning and operating cell towers and data centers diversified across the globe. Other notable positions include data center REIT Equinix and industrial REIT Prologis Inc. Additionally, the fund is top-heavy, as the top 10 positions account for 63% of total assets. Keep in mind, each of these firms owns and operates thousands of individual properties, meaning risk is generally well spread at the corporate level. In essence, XLRE provides an indexed approach to real estate, offering investors a way to access real estate investments generally reserved for institutions. XLRE also provides an opportunity to diversify holdings in traditional equity funds. Given many investors center their portfolio around large capitalization equities, there are ample reasons to look for diversification opportunities. Real estate accounts for only 2.6% of the S&P 500. In contrast, information technology accounts for nearly 28%. This is not surprising, given the strong performance of the technology sector, which has led the S&P 500 over 3 of the last 4 years. However, the lack of meaningful allocation to real estate presents an opportunity to investors to invest directly without overcommitting. XLRE launched in 2015, operating successfully and distributing dividends nicely ever since. The fund has performed consistently with the sector. The fund trades well, given recent increases in assets under management. Average daily volume now sits over 7 million shares, ensuring efficient spreads and adequate liquidity for large investors looking to buy or sell blocks. XLRE is a core fund for investors looking for equity REIT exposure. The fund invests across a wide set of the investable universe, excluding mortgage REITs along the way. As a result, investors are purchasing an interest in some of the most desirable real assets. Considering the growing assets under management, healthy trading volumes, and rock-bottom expense ratio, it should come as no surprise that XLRE is a popular fund. For more videos relating to finance, please like the video and subscribe to the channel. See you in the next one.